afternoon. It's Saturday. Saturday, 3 p.m., we share knowledge with you and are trying to wake you up from your afternoon nap. This is a turkey time, right? And you're thinking of how to plan your Thanksgiving dinner. I literally already started to thinking about that, and I made sure that I got all the sitting chairs ready at home. I have wobbly chairs, so I throw them away and I bought new one for Thanksgiving dinner. Go that far. Turkey. We want to talk about turkey, not because we eat it, and tax people. People like me breathing, drinking, and eating taxes, and everything comes to our life is about tax, is about what do you do on accounting, how do you file taxes. So I want to kind of tell you about turkey farms. Not that I have a turkey farm. No, I don't. But we do have clients with turkey farm, chicken farms. So I know how that works on the accounting and tax side. Kind of want to bring that to you. It's entertaining, okay? It's not serious. I mean, the knowledge is right, but the talk is general. And I'm not going to bore you with details. But I kind of want you to get a feel of, what if I want to be a farmer? Right now, I don't like the business I'm doing. I don't like the job I have. And I just want to be in touch with the nature and be in the mud all the time. And getting the fairy friends and turkeys, chickens, eggs, dogs, things like that. With that said, let's talk about turkey farms. Of course, you can translate that to be all the livestock kind of farms. And I know if you have bigger animals like cows and horses, on the depreciation side is a little different. But this is livestock farm, and a lot of principles are very similar. So let's kind of walk through that. And you are looking at our website, and you notice that, and we are, I was just named an award by Business Record here in Iowa. And this award is actually talking about people who made significant contribution to the society, and is called Envisioning Iowa Leadership Award. So I'm pretty proud to be nominated for that and receiving it. And you also see our Houston, Texas branch right on the screen. So that is our branch. It's already open. And then we also have, we sometimes link you to our YouTube channel, which is right here. We give you the newest videos we have in here. Becoming a subscriber to our website. I mean, I wish we could be more entertaining, but how much entertainment you can give on taxes? I think we are already doing pretty good. So you want to, thinking that, well, I want to spend my time learning something that I otherwise don't know, come to this website. I actually just speak to one of our clients who are doing tax planning. We were talking about hiring foreign workers. I just told him that just come to our YouTube channel. Right here, you type into foreign workers, then you're going to get into foreign workers videos we have. Those are still good, and the knowledge was not so outdated. So it's really a good resource for you for some serious knowledge and down to earth. We don't speak complicated English. English is my second language. And if you really listen to me, you pick on a lot of things that I don't say it right, or accent, however you conclude it. So I'm not perfect, trying to be, but never will get there for real. That's why we put in the webinar with slides, because that saves me from not knowing what I was talking about. Okay, turkey farm tax accounting, folks. These are lovely turkeys. Doesn't look like the one you put in your roaster. They got feathers there still, right? And I want to kind of give you a kind of a sense of how tax people live their life. When I look at this particular slide, this is a fact about turkey farms, right? They're talking about what turkey farm normally have to do. They have to keep the pasture, water, food clean, and they have to invest in the movable roosters so the turkey can be staying around. They have to raise turkeys separately from chickens, provide enough space for the turkeys, and ensure the turkey house has good ventilation. You know what I'm thinking when I read these? I am thinking about, oh, that ventilation, that would be an equipment they needed. Oh, that space, that means probably the turkey farm should buy a piece of land, or maybe even with the trees and the forest, so it's kind of an environment for turkey, and raise turkey separate from chicken. Okay, and the turkey farms is turkey farms. To have a turkey farm and chicken farm need to be separated. And then, the movable roosters, those are equipment too. So you need to have them, and you have clean food, so there's a supplies. So I think in terms of how these are deducted from your tax return. All right. So with that, we are weird people, right? We're like thinking everything we read, we think of the taxes, right? Of course, the election is the same thing. We think about taxes. Okay, now, our firm, we have 27 years experience, and we serve 12,000 clients worldwide. I'm not kidding you, is worldwide, because we do have Australians, Canadians, Vietnamese, Chinese, and, people from all over the country who are doing business in U.S. And we also have 5 branches currently, and the Texas one is our newest one. So I welcome you to refer clients from Texas, Houston area to our firm because we can serve them in person. So did you hear me asking about new client referrals? Yes, that's what we are asking you for that. And I served at the National Taxpayer Advocacy Panel for 3 years. So these are the years, and I work with the committee members, so we provide advices to IRS. So I want you to brag about that because not everybody has that kind of experience, and not everybody can be on that panel. So it does require qualifications to be on there. All right, I wrote these 2 books already, so they're on Amazon. And if you'd like me to autograph it for you, you buy it and you come to our local branch, and we'll get that done for you. I am writing 2 more. One is 2 p.m. and 6 p.m. Just wait for the 2 p.m. I don't know how long you're going to wait because the 2 p.m. is an extension of the business. Like you expand your business outside of yourself. To expand, that's what Community CPA is doing right now. I really want to see the success of Houston, Texas branch is solidified. I want to see that become a reality before I finish the 2 p.m. book. So that may require a year, but I am drafting the book overall and giving examples of my other clients who are so successful. I admire them. They have done really good. It will be in the book. So that book is a collection of success stories of people who had go beyond of their own business, expand their business to the global level and to the nationwide, and that is what we are writing about. And we hope that you go through business journey 8 a.m., 10 a.m., 2 p.m., then we will finally arrive 6 p.m. That is a chapter. I don't have much of content yet because I'm a little far away from there. My mind is not there. I am at 2 p.m. stage. All right, no responsibility disclaimer. This is just to make sure that when we are here, talk to you, free format, right? And what we share with you, we do not take responsibility. And if you felt like our content need to improve and the things were not said right, and talk to us and we reevaluate that, but don't take our advice without screening and to be used because we don't have the service provider relationship with you at this point. But we welcome any one of you listen to this webinar to become our client. Business of farming. And you can be a farmer. Doesn't mean you just wear your overall pants and with a pipe in your mouth and you become a farmer. No. And you want to become a farmer, you want to structure yourself to be a farmer. The easiest way to be that way is a sole proprietorship, where you file the Schedule F to report your agriculture business net profit and losses on that form. We talk a little bit about the form, folks, but right now I want you to know that you can declare you're a farmer by filing that form. You don't have to be a business entity, but you also can run your farm under business entity. Can be a C Corp, can be a S Corp, can be a partnership, can be a co-op. There's all kind of business structure you could choose to become. And you literally can run your farm under nonprofit as well. So give you another one. But it is the choice of entity type will drive how your tax is going to be. All right. So when you are becoming a farmer business, and especially a turkey business, this is the NAICS code you need to choose. You need to choose that to be 112300, poultry and egg production. Okay, that's your turkey. See, underneath there, there's sheep, goat, agriculture, see, cattle. Did you see that? Interesting, right? Animal production. This is what I call the livestock business. You are just like working with animals and to produce human food resources. This is the profit and loss from farming, and under Schedule F. I just grabbed the form and then realized it was for 2022, not for 2024 or 2025. 2025 is not here yet. 2024 and 2 are very similar, so there is not much of a difference. I just want you to look at this form. I got on 2 slides. You see that, right? And I just want you to pay attention to part 1, part 2, and the part 3, because what really important here is this. So the Schedule F, part 1, part 2, part 3, and is representing the certain kind of accounting method that you're deploying in your farm business. So here I summarize that for you. If you're running that on cash method just means that whatever you spent is your expense, whatever you really received is your income. It is not determined by, it's not determined by different way of calculating income. For example, you could calculate your farm income by 5 years average, and instead of just what you received this year. But whatever the accounting method you use, that form you see on the Schedule F, you would choose part 1, part 2 for cash method accounting. But if you are accrual method accounting and you use part 1 and the part 3, okay? So that is the only thing. I want to show this table for you because it's useful when you are the first-time farmer. You don't know how to file it, and then you can save yourself not to be bothered with certain part because you're running on the cash method, right? All right, and I have 2 slides here to talk about income and expense. So if you have a turkey farm business, and how do you, do your income? So there's so many ways to work your income. There's some things that I want to mention. Doesn't mean you need to be an expert knowing exactly how to do it. I just want you to have a sense that when you are running a farm, your income is not straightforward, just what you got that year could be something different. Of course, it can be whatever you sold your livestock, right? So that's a straightforward. But farmers can average their income over several years to reduce tax liability during the high income years. Okay? So this provision helps to stabilize your tax payment by leveling out income fluctuation typically existed in farming operation, right? If you, for example, if you remember a couple of years ago, there was a bird flu and it killed thousands turkeys and chickens in the farm. So they all has to be trashed away, cannot continue to be on the farm. So when you have this kind of situation happens, of course you have insurance that taking care of you, but you could consider your income reporting with alternative. So there, the income from cooperative distributions that you receive a 1099 PATR form. And if you are part of co-op and you get that kind of form, that is your income. But agriculture program payment coming with 1099G kind of income, and then also there is a kind of income is coming from the co-op CRP payment. I actually forgot what CRP payment, but the next one, the commodity credit corporation loans, that is considered income, but not always is income. Depends on how you signed that loan agreement. So if you read the little letter, it says that if you didn't report this commodity credit corporation loan proceeds as income, and in most of the cases you don't, but if you pledged your production to secure that loan, then you report that as income. So just give you the variety, and so you know there is a complexities coming in when you have these kind of, they call them a CCC loans, and then co-op insurance proceeds. That often happen in the farming industry. You birds all dead, and then you claim for the receipt, right? So it depends. If you're cash basis farmers, those insurance proceeds are taxable to the recipients when received. Okay, so then of course there's all the other ways to get the farm income. You know, generally speaking, income is income, but when you are a farmer, you have a little bit of flexibility, you can tell. And the average income method, your co-op insurance proceed treatment, and then also your, all these 1099 you're getting, that will dictate how much of income you're going to be putting into your farm. If you say that I don't have anything complicated, I just have my turkey farm and I produce turkeys and I sell, I don't sell, then your income is related to sales, right? All right, so that is about income on farming. Just want you to know it is a little more complex than you running a retail store and getting the money from your POS system. Oh, what about expense? Expense is also very interesting. It has something that I want you to take a note. Number one is prepaid farm supplies. So the IRS has a limitation. It says that if you paid for the supplies, but for next year, but you haven't really, you purchased, but you're not used it yet for the supply, there's a 50% of a threshold from IRS that you can deduct 50% of that for the prepaid farm supplies. The farmers also qualify for additional tax breaks if they donate development rights on their land through conservation easements. I know a lot of folks who are listening to me, if you are first generation of an immigrant, you probably don't get into this conservation easement stuff. But let me tell you, let's say you got a piece of land and you don't want this piece of land to be developed into townhomes, and you want that to qualify for conservation easement, and then you actually get a huge tax deductions because you will donate the right over for the conservation team to make that a natural turkey feeding field. Make sense? So that is a significant tax deduction. For landowners can generally deduct up to 50% of their AGI in the year the donation for qualifying conservation easement. And for farmers and the ranchers may deduct up to 100% of AGI if they meet certain criteria. I just want to throw that buzzword in your mind. Maybe you will buy a piece of land somewhere that really can be developed into conservation easement. I have a client, actually first generation of immigrant, and it's also a very reputable doctors. Both couples are doctors. They actually bought a huge piece of land with forest, lake, and everything on it. So they are working on getting that to be a conservation easement. So that way, it will never be developed. It is always going to be natural habitat in there. So, by doing that, they are reducing their taxes. So local tax and the state tax credit is also a thing for farmer. And you want to really, if you are in Minnesota and there is a beginning farmer program that really going to help you to lower your taxes, then of course conservation easement is a deduction that we sort of mentioned that here. Sales tax exemption. Yeah, when you sell turkeys and you sell agriculture product, that is tax exempt. And also the machinery equipment that you buy for your farm, that can be exempted from the use tax too. So make sure that you care for the local state tax exemption credits for the farmer. So that's one way to look at, right? So I also want to mention that expense for the turkey farm is the breeding fees, the cost affiliated with breeding turkey. That's the expense that you can deduct. All right, we look at income, we look at expense, and what about capital investment? I am a new farmer. I just come in and I what do I need? So most likely you would purchase the land, the farm piece of land, right? A lot of times when you purchase that, it comes with the farmer's residence. It has a little bit of the residence in there, and the rest of it is big farm. So when you get into that situation and you want to understand the value of the home, and then you split it out for the farm. The reason I say that is because the farmer who sold that to you, they want to qualify for their $500,000 capital gain free tax. So they might allocate more values to their residential home, than what maybe the market price calls for. So you want to make sure that you understand what that is and be really mindful. The residential home, that piece of little land with the house, need to be separated from the farm. And for turkey coops and the storage facility, those are your buildings, okay? And the buildings has a building depreciation rules, and just make sure you follow that. And the equipment, the feeding system, all of that, the vehicles for transporting. Farmers can deduct up to 75% of their farm vehicle expense as qualified business expense without needing to detailize the detailized record. This is particularly beneficial for turkey farms that relies on transportation for feed and the livestock. And I mean, the other thing I want to tell you is that because I have a client about turkey farms, and then, turkeys grew really fast. They 5 to 6 months from the moment they hatch to the moment they become market weight to be able to be butchered. And it is only 6 months time. And within the 6 months, you don't have a lot of time. You need to find the places that you can process them. No kidding. If you don't find the places you can process them, your whole bunch of turkey going to be so old, it's not edible, their meat, right? So it is really it is not so much accounting and taxes in that regard. But what I am also seeing accounting taxes right here is that because of you have this kind of timeline, 6 months, so you actually know when your turkey income would come in. So maybe you hatch them, you sell them, you hatch them again, you sell them again, because your facility is limited. You can raise 6,000 turkey, then you have to hatch them 6,000, raise them 6,000, then you sell them, then you need to hatch again another 6 months again, right? So you need to know when you are actually ending the processing the turkey. The reason I say that is should be where you consider your years. So are you a January to December year end, or because you always get your cycles ended in the month of June? okay? If that's the case. And then what you really want to do is, because that is the month you get a lot of payment coming in, or maybe people just pay you in one lump sum and give you all the money already, and then you want to figure out when the money comes in, that should be your first month of the year. Does that make sense? If you get a lot of money, if you get more than 25% of your sales in 2 months' time, you qualify to have a fiscal year ending business. You don't have to stick with January to December. You can start. Let's say you get most of your payment in May and June. Then your beginning of the year should be May 1st. Because you want the money to come in to you in the very beginning of the year, then give you 12 months to spend it. By the time you arrive the end of April, you pretty much used up your money already, so you don't have a huge net profit just because you haven't really had time to spend. Okay, just a thought. And breeding in the turkey farm business and in any livestock business, you have a difference between breeding stock versus inventory. Breeding stock are the animals that they use for breeding. So they're your asset. They're almost like your popcorn machine, right? They're your asset. They're a machine. They produce the hatches, the little chickens for you. So you got your breeding stock. That's your asset. You need to depreciate that. Normally it's about 5 years. Okay? And then your inventory is different. Your inventory is your 6,000 turkeys that you hatched, and you're going to process them 6 months later, right? So, of course, inventory, it is something that you write them all off, and, breeding stock asset, you go through the years. You go through the depreciation, right? But what if you sold your breeding stock really fast, and then you just write it, you just put them to cost of goods sold, just like how you trade inventory, right? So that is actually very important capital end of discussion. If you get audited as a farmer, a lot of time that comes, okay? And they want to know what you spend on the breeding stock and what you have in inventory. All right. What about infrastructure? Of course, infrastructure is infrastructure, and it is your capital investment, so you will depreciate that accordingly. All right, so sales of farm. This is the one I slowly covered from the seller standpoint, right? I was saying that you buy a farm, it will come with a little house and come with the farm. But what if you sell your farm, right? So the sale of your farm may involve sale of both non-business property, which is your home, and the business property, right? That is the land, the building used to farm operation, and also the machinery and the livestock. If any gain from sales includes a gain from sale of your home, you may need to consider that, if you're married, it's a $500,000 capital gain exemption. So you want to make sure that, I sold everything, but then make sure you carve out which piece is your home that qualifies for the $500,000 capital gain exemption. And if you receive payment for your farm in installment, certain gains may be eligible to be taxed over a period of years when the payment is received. So you sell farm, that is a lot of things to consider. And sometimes the parents are selling the farm to the kids, and then the installment plan needed to be in place. The capital gain need to be recognized piece by piece. So those are the things that we want to just bring to your attention. There's so much we can dig into these things, right? And you may say, well, Ying, you talked about things like 1202, capital gain exemption. So what about what? And those are the things. That's why we have our webinar. If you just go onto our webinar, type into exemption related to Section 1202, and then you will pull up all the things, how people can walk away with $10 million capital gain in their selling of their business. All right. Let's talk about self-employment tax for farmers. Okay? Farmers in United States, including those operating turkey farms, including you, are subject to self-employment tax on the net farm income. See? You don't have to run W-2. You have this Schedule F and you are running as a sole proprietor. You are self-employed farmer. And then you pay taxes on the net farm income. You may say that, Ying, I don't have net farm income. I'm normally running a loss. Then you don't pay. Okay? Total self-employment tax is 15.3%. That is higher than the income tax on the first threshold, right? The 15%. 0.3% or higher. So out of the 15.3, so it's 12.4% on Social Security and 2.9% Medicare. So that's why where that 15% comes. Farmers can deduct 1/2 of their self-employment tax when calculating their AGI on 1040. So what is AGI? Adjusted gross income is the total number that the IRS is going to apply their tax table on that number. That's a total income number. But they let you to deduct half of your self-employment tax amount to reduce that AGI. It's not a lot of reduction. Because you know, if you make $100,000 net farm income, your 15.3% is $15,300. So half of that you can reduce your income. Ladies and gentlemen, it's not tax reduced tax. It's tax reduced income on your 1040. So which help to reduce some. It's not a lot. And but you should know that on your Social Security benefit statement, and you will have that full benefit of what you put in. So that half deduction is a little incentive, does not impact your benefit accumulation at Social Security Administration. And before paying for the 15.3%, we want you to consider all the conditions that maybe take you away from paying that 15.3%. You must be material participate, and you must know what was all deducted in your business, right? Because if you are not actively participating, maybe you are a passive investor. If you don't really know what is all deducted, maybe you just you just an investor and they give you the result of the payment. That is all, because you don't get involved with everything. All right? So that is where we say that if you are actively self-employed, working as a farmer, with your overalls and with your tools in your hand, and or maybe turkeys are running all over around you, then you are self-employed and you will pay the 15.3% self-employment tax on the profit. But if you don't even know anything and you are passive, then you don't pay self-employment tax. You only pay income tax. All right, and the conservation reserve program. This is related to that easement talk I had earlier. That payments are annual. Those are annual rent income, and they are taxable, subject to self-employment tax as well, unless the farmer is claiming Social Security benefit or disability already. Okay, so that is just to say that certain income comes in and it's subject to self-employment tax unless certain conditions exist. So that kind of give you a overall feelings about farms, right? And I actually working on our orchard. It's also a farm, but it's a fruit tree farm. Okay, you plant the trees and they have fruits, and you it is so immature. So I didn't really figure out the distribution channel yet. But, the fruits are producing in the fall. So far we have been enjoying to just use it for different things in small scales. But farmers requires you to be full-time participating with the income, with the expenses, with your equipment, so you can do certain deductions, right? So for folks who are so tired with a white-collar kind of work and just want to get your hands dirty and bending your knees and rolling in the mud, breathing fresh air, that is the way to live life. I love to be farmers. All right. That kind of concludes what we want to talk about turkeys. So I left out the recipe for cooking turkeys today because all of the recipes so far I tried, it wasn't very satisfactory. So once I figure out a really good one, I will be concluding this webinar with my recipe of turkey. So wait for next year, okay? We talk about turkey every year around this time. But if you just can't wait for my recipe, you just want what I have, whatever that is, and you can always book my time and online. And we have our website, right? You go onto our website and you can go into appointment, then it will show you all the partners. Let me tell you, none of them really know how to cook, so don't worry about getting recipe from them. And if you really just want recipe, I'm the only one. And of course, most of the people book my time, pay the fee for tax advice. So, but if you want to change that to recipe, I am okay with it. You can book our time, folks. Okay, that's actually the best way to book my time because I am just really, really booked. When you get online, you won't find a lot of options unless you go further down, but you obviously can find something without even calling and to book my time. All right, tax planning service is what we're doing today. If you ask me that, Ying, what do you do these days? I'll tell you that 120% of my time is on tax planning. I'm literally in deficit because I can't even come up with more time, but most of my time is on the tax planning with clients, with folks who really need some guidance, and with their success in business and they need us, or some folks are going through a hard time or going through expansion. They need our time to help with the bank loans, or they need our time to know when is the best time to file bankruptcy. And so all of these things are coming in at this time of the year. And we are facing, and I want to address the elephant in the room because this election and it did not forecast to bring prosperities. We are heading into recession according to all the major media, not social media, major media on, you know who they are, and that's what they're projecting. So the banks are hoarding cash, and the manufacturings are purchasing inventory, and there's a lot of movement. Just in case you don't know, and now you know, it is a tariff tax prevention. People are trying to buy everything they can buy right now before the 20% tariff tax coming in, and for goods from China, 60%. So those are the things. If you are the one that eating rice as your major food source, though majority of them are imported product. What that means is if you buy that bag of rice for $20, prepare that to be $24 and more. And if it is rice coming from China, prepare that to be $26 and more. So those are the things we are facing. Business people are facing these challenges. That's why tax planning is important. It is not you just ride by the waves. Oh, it's okay. If I lose money, everybody lose money. And I'm sorry, if you lose money, your kids don't have food on the table, but other people lose money, maybe they still have food on the table. We're not the same. And President Trump declared 6 times bankruptcy. Okay, so he still have gold-made houses, and so we're not the same. And don't kidding yourself that this election, this economy has nothing to do with you. Your business is just gonna naturally be there. No, you need guidance. Tax planning is one of those guidance you would get. All right, and our website, Community CPA. This is our YouTube channel, and you want to subscribe to our channel. We are true the business. We tell you if there's good news, we tell you good news. If there is a bad news, we tell you the bad news. I am neutral, okay? I registered as independent. So I am neutral, and what I want to do here is just 100% for the good of business entrepreneurs who are not billionaires and trillionaires, and you are just ordinary entrepreneurs, okay? All right, my website, email address, phone number, we open 6 days a week. What else you want us to do? We have done everything for you, and it is your action to take us in as your provider, service provider. We will do good for you. All right, I'll talk to you again, and on Tuesday. Oh, by the way, this Tuesday is really important. If you run a restaurant, if you have employees, you want to be on Tuesday, because we're going to talk about Department of Labor audit and what the business owner need to do based on real life experience we have. We see what clients, what people are doing right now, and we'll tell you what's going on.